I have been talking about crypto's killer use case for quite some time on this channel. Now, if you guys have been watching the channel lately, you already know what that killer use case is. And yes, it's on-chain FX, aka just payments, right? When we think about on-chain FX, it's a massive use case for crypto because the FX market itself is, a $7.5 trillion per day market, projected to be over 8 trillion by now. And if we're thinking about that logically, $8 trillion per day, the crypto market cap isn't even at $8 trillion. We're not even at $4 trillion. So if you think about just how crazy that type of volume is, it's massive. Now, it's not going to move on chain all at once. It's not going to happen overnight, but we are starting to see the warning signs. Now, I want to go over a recent announcement from the Australian Digital Dollar project, because this is definitely a big update and it does involve multiple networks in the space. When we are thinking about on-chain FX, obviously, it's not going to be just a one-size-fits-all approach to just one network being the dominant name. No, it's going to be multiple networks being tapped in. And the best part about this is, with $8 trillion per day, multiple networks can definitely win from this. And that's a ton of money that could affect the underlying value of a lot of these gas tokens like HBAR, XRP, XLM, etc. Now, let's talk about this announcement. So here we have AUDC has been granted an Australian Financial Services License, AFSL, by ASIC to provide non-cash payment facilities. The license reinforces AUDC's position as a regulated issuer of AUDD Digital and supports Australia's evolving digital payments and settlement infrastructure. Again, this is a huge win for the stablecoin game. It's also huge for any network that has AUDC living on it, or AUDD, I should say. Because again, this is going to provide that gateway, if you will, to having the Australian digital dollar integrated completely into the Australian payments market. Now, if we're looking at Australian digital dollar on rwa.xyz, we could see that this is a very small stablecoin, only about $10.2 million on chain. Monthly transfer volume is just over 71 million. It's a very small stablecoin. But we are starting to see that shift from USD stablecoins to non-USD stablecoins. And I think that that's going to be a big deal when it comes back to a lot of these stablecoins, especially ones that are starting to see major advancements like this. Now, just right off the rip, looking at the networks that this is issued out on, Stellar, Ethereum, Base, XRP, Solana, and XDC. Now, on XDC, there's no supply. On Stellar, this is where most of the supply is, nearly $8 million. And then the XRP ledger, very small amount. And then beyond, Stellar and Ethereum and even Base, the amounts here are just very small. But again, we're still very early on the adoption of AUDD. And also a lot of the value tied back to the stablecoin, I just simply don't think is being tracked, especially considering the fact that, rwa.xyz is a little bit slow on a few things, which we'll also address. But if we go over here to Tokenizer's recent post, this does highlight all of the networks tied back to this. And yes, Hedera is one of them. So here we have exciting news for AUDD stablecoin. Australia's Securities and Investment Commission approved AUDC for an Australian Financial Services license. As we know, AUDD's been well aligned with Enterprise DLT. The chains their AUDCs on include XRP, Hedera, XDC, Red Belly, and Stellar. And it's not just basic stablecoin deployment, but we've seen AUDD confirm usage in Project Acacia on Hedera, Hashgraph with Australian Payments Plus. Additionally, XDC Network is looking to leverage AUDD to enhance payment efficiency for global trade. And now with official approval from ASIC, it truly unlocks the floodgates to real world usage of AUDD stablecoin. And that's exactly what I'm saying, right? Like if we think about what this really does, it unlocks that door that's really kind of holding the stablecoin back from being integrated into the Australian, system. So this is huge for the entire infrastructure to have access to AUDD. With Rails to Enterprise DLTs already established as well, we can start to see this scale pretty quickly. And of course, yes, those networks are great to mention. Now, let's go back to the original focus of this video, which is, of course, the on-chain FX market. We know right now, if we're looking at the stablecoin market, it's still just around $300 billion. The monthly transfer volume just surpassed over $10 trillion. By the way, this transfer volume is extremely significant to watch. I think that this is a very important thing to watch as well when it comes back to the whole idea of just stablecoin adoption. Currently, back in January, we recorded, the most amount of volume in the last like 3 or 4 years. Now, if we're thinking about this current month, we're nearly halfway through. It's probably looking like about $8 trillion. But it's crazy because we aren't really at peak times in crypto yet. Stablecoins are recording well over $10+ trillion in monthly transfer volume. That's wild. But when we think about stablecoins, we're still early in this game, but they are growing rapidly. I just saw a post from C Network, which was stablecoins have grown over 1,700% in 5 years. The digital dollar is here to stay, and the projections say it's just getting started. Citi, $2 to $4 trillion by 2030. Morgan Stanley, $2 trillion by 2028. U.S. Treasury Secretary, $3 trillion by 2030. The growth is consensus. Where trillions settle isn't. Now, again, the key thing that we are looking at here is that we are currently valuing this market in billions of dollars. Stablecoins are going to be a multi-trillion dollar. I would argue tens of trillions of dollars in market cap will hit stablecoins over the coming years. And if we're thinking about that, we're also looking at the use cases that this enables. We have over here Insight, 8 of the top 10 fastest growing tokenized asset deployments are stablecoins. The other 2 are tokenized stocks. Now, when we're actually looking into this, we can see all of the stablecoins here, which majority of them are stablecoins in terms of the top 10. Even if we're looking at like some of these that are saying like tokenized funds, they do include essentially stablecoins as well. But it's wild to see just how much growth is happening across the stablecoin game at a time where the market is pretty much down. Now, if we go over here to Circle, this is where we can see the big picture happening with stablecoins. We have here FX has long been constrained by pre-funding cutoff times and fragmented venues. Stable FX brings currency conversion on-chain with familiar RFQ execution and always-on settlement using stablecoins. In 2025, FX began to operate with the speed and flexibility of the internet. Because again, when we are looking at stablecoins, it's not just about USD stablecoins. That's why we bring up AUDD. Like when we think about these stablecoins right now, very small in numbers, but they will start to expand rapidly. And this is where we start to see the big picture of the FX market moving on chain. This is not going to be a small time thing. This is going to be an absolute massive amount of capital moving on chain. It's not going to happen all at once, but it's already beginning. This is already starting. Now, if we're thinking about on-chain FX, we think about these networks, right? We know that Ripple recently put out an institutional DeFi roadmap for the XRP Ledger. Major things are going live on the XRP Ledger. There are amendments. They're going live right now to enable tooling, to enable these massive use cases, like, for an example, FX settlement, collateral on-chain credit, things like that. XRP is playing a major role here in the evolution of the foreign exchange market. And if we're going back to stablecoins, let's go back to AUDD real quick, just so that I could grab XRP. So if we're looking at XRP currently, the stablecoin market cap is up. It's nothing crazy right now. However, if we're looking at the amount of stablecoins currently on the XRP Ledger, there's about 7. Now, all of these are not USD-backed stablecoins. We have a Brazilian real here. We have multiple Euro stablecoins. And then, yes, we do have the AUDD stablecoin. XRP is starting to witness more fiat currencies being tokenized on it in stablecoin form. That's exactly what stablecoins are. Right now, in terms of the actual stablecoin market, we could see which jurisdictions have their stablecoins. The US has over 23 stablecoins in this game. Germany has 1. British Virgin Islands has 4. And then the rest, again, they're very small amounts, but there's multiple stablecoins outside of USD-backed stablecoins. This is not going to slow down. And what's even crazier about this is that we know that the UK just enabled stablecoins for this year. They are going to activate and launch UK-backed stablecoins this year. So we will have digital pounds on chain. And this is a big deal, especially when we think about Hedera. Because don't you guys remember that big announcement from Hedera with Lloyd's and Aberdeen? Yeah, Lloyd's and Aberdeen leveraged Hedera for regulated tokenized asset trades using Archix. And this is all based around the FX market. Lloyd's Banking Group, Aberdeen Investments, and Archix have executed the UK's first foreign exchange FX trades using tokenized RWAs as collateral, powered by the Hedera network. This landmark initiative demonstrates how tokenization can enhance collateral efficiency and regulatory compliance in one of the world's most active financial markets. And the best part about this is that the UK market for the foreign exchange market is $5.4 trillion. They make up the largest portion of the FX market. This is wild to see. And again, Hedera is a big player in this as well. So right off the rip, let's go back to the whole idea of AUDD. We have XRP, we have HBAR, we have XDC, we have XLM, and then we also have Red Belly. Now, I'm not too familiar with Red Belly. I've heard about it here and there, but I haven't really looked into it. But if we're looking at the four major players here, XRP, HBAR, XDC, XLM, they are starting to witness a big shift happen around all of them. Now, XDC really isn't focused on the FX market. It's more trade finance, initiatives, but they are starting to build out that settlement engine on the platform as well. So we could definitely see FX live on all of these networks. Now, if we're thinking about all of this as well, right now, currently, most of the stablecoin game is dominated by US dollar-backed stablecoins. In fact, 90+% of the market share is in US dollar-backed stablecoins. So how does that change? Well, we already know that 2026 is now starting to be looked at as the year where non-US dollar-backed stablecoins start to take off. Euros are actually starting to take off in a big way right now, as you guys can see from this chart here. Again, this got posted from Token Terminal. And yeah, we could see euros picking up in terms of a massive jump on this chart. They just surpassed $1 billion. Again, very early still compared to US dollar-backed stablecoins, but I do think that this is going to continue. Now, this is quoting a post from Richard Chen, which says, areas I'm excited about. Number one, non-US dollar-backed stablecoins. On-chain FX is the holy grail, and liquidity for non-US dollar-backed stablecoins is the bottleneck. Most teams here are too crypto native, want to see someone take the Circle/Tether regulated route. Equity, RWA, perps. Perps are better financial instruments than options and futures in almost every way. Eventually, they will be the most traded derivatives in TradFi. And yeah, listen, when we think about what's happening here, we still need to start to see a big shift happen in this market where non-US dollar-backed stablecoins begin to grow in a big way. It started with US dollar-backed stablecoins, which is why they make up 90% of the market, but I do believe that that will shift soon. And we already know that some of the biggest players out there in the world, like BMW, are already looking into on-chain payments with FX. Now, they are utilizing JP Morgan's Kinexys, which technically is on Base, but this is with euros to US dollar. So this is definitely a big one. Obviously, we know, like I said, that they're tapped in with Base currently in terms of a public network. We know that this might be a private initiative. So yeah, this is private. So this is on a permission blockchain. So it's basically on the private Ethereum tech. But this will eventually lead into, public blockchains being tapped in for this, because we already know that private blockchain initiatives like this from JP Morgan, they're walled gardens. So they're not going to be as efficient, as using a public chain. But the fact that we are already starting to see FX markets being tested on chain goes to show you exactly where we are headed. And the fact that Hedera already started to see this firsthand with some big players goes to show you just how well equipped some of these networks are. Like, for example, the XRP Ledger, Hedera, Stellar with XLM, and then even XDC. But I'm very excited about this big announcement from AUDD. I think that this is great. Hopefully this can really grow the Australian, stablecoin market in a big way. I think that this is the year where we start to see a big shift from US dollar-backed stablecoins to non-US dollar-backed stablecoins to really enable on-chain FX in a big way, which is, of course, yes, the killer use case for crypto. So with that being said, I hope that you guys enjoyed this video.